Let us see the third problem. The balance sheet of Infosys Limited for the year ended 31st March 2016 is presented below. Prepare a comparative balance sheet. Infosys Limited balance sheet for the year ended 31st March 2016. Amounts are given in crores. Source of funds March 2016, March 2015. So 2015 is a base year, 2016 is a current year. Equity share capital 1148 in the current year, and in the base year it was 574. So that means liability is increases to 1148. Reserves in the base year 47,494, and in the current year it increases to 56,009. So total liability reduces, in the base year it was 48,068, and 2016, that is the current year, it increases to 57,157. So we have to calculate what is the changes in rupees and in percentage. So gross block, applications of fund, under that gross block. What is gross block? Gross block means total value of assets that a company owns, or original value of the all the assets. So if you deduct depreciation, you will get net block. So under fixed assets we have to consider this net block. And capital work in progress. So this is also a fixed asset. Capital work in progress, where the work of creating a fixed asset that is in progress. So fixed, it comes under fixed asset. That's why. Investment 9,798 and 8,627. So you have to see the year. So 2015 is a base year, 2016 is a current year. So in current year the value of investment increases. Sundry debtors value increases. Cash and bank balance. So from the base year to current year, cash balances also increases. Loans and advances. This is asset, that is loans and advances provided by the company to others. Okay, so that also increases. The current liabilities and provisions. So these are coming under equities and liabilities. So there you have to treat as current liabilities and provisions. These are the liabilities. So we'll go for solving this problem. This is a statement. Comparative balance sheet for the year ended March 31st, 2016. Particulars: 2015 base year, 2016 current year. Changes in rupees and changes in percentage is equals to change divided by base year into 100. First we'll see about the liabilities. Equities and liabilities. Under the first head is shareholders fund. Under shareholders fund, here we have equity share capital and reserves. So we'll take equity share capital. In base year equity share capital was 574, in current year 1148. So there is an increase in equity share capital by 574. So changes in percentage is 574 change divided by base year value 574 into 100. So changes is 100%. Then second head under shareholders fund is reserves. So reserves, in the base year it was 494, and in the current year it increases to 56,009 rupees. So increase is by 8,519 in rupees. Then in percentage, change divided by base year value into 100. So change is in percentage 17.93%. So we done with first head of equities and liabilities. Then second head, non-current liabilities. Non-current liabilities. So there is no item which is there in this balance sheet relating to non-current liabilities. So non-current values are nil. Then current, there is current liabilities and provisions. We can take it together. Current liabilities and provisions. So in the base year, 5,700 plus 8,045, total 13,745. And in the current year, 6,801 plus 8,809. So that is 15,610. So there is increase by 1,865. So we'll calculate in percentage. 1,865 divided by base year value into 100. So percentage is 13.57%. So we're done with equities and liabilities. Now we'll make a total. Current year total value for liability is 61,813 and it increases to 72,767. So total increase is 10,954 and in percentage 17.72%. Then we'll see the assets. Non-current assets. Under that, first item is fixed assets. So which are the fixed assets are there in this balance sheet? That is net block, net value of all assets and capital work in progress. So in the base year, 7,347 plus 769. So two assets we are taking together under one head, that is fixed asset, 8,116. And in the current year, net block value is 8,248 plus capital work in progress is 934. So total is 9,182. So there is an increase in fixed asset, that is 1,066. So changes in percentage, change divided by base year value into 100, that is 13.13%. Second head is investment. Total investment, it is given here 6,857 and 11,113. So there is an increase in investment value, that is by 4,256. Increase in percentage is 62.06%. Then under current assets, so there are many current assets here. That is sundry debtors, cash and bank balance and loans and advances. So separately we can take or together also we can. So current year value, base year value of sundry debtors 8,627, cash and bank balance 27,722 plus 10,491 loans and advances. So it is 46,840. And in the current year, 9,798 debtors, cash 29,176, loans 13,498, total is 52,472. So there is an increase. So that is by 5,632 and in percentage 12.02%. So now we'll make it a total of assets. So total changes in percentage is 17.72%. So from the base year to current year, there is an increase in liabilities as well as assets by 17.72%. Next problem number 4. Magneto Limited presents their profit and loss account for the year ending March 31st, 2016. Prepare the comparative income statement for the purpose of analysis. So your income statement given. So we have to compare the values of 2 years, that is base year and current years of each item in income statement. So here materials in 2015 200 and in this 250 in 2016, wages, production expenses, administrative expenses, selling expenses, and net profit given, and on the credit side there is sales. Here in case of income statement, we are going to analyze each component in income statement. So finally we are going to analyze the profit which we are getting by preparing comparative statement. So is there any increase in profit or decrease in profit? What is its percentage in total? We are going to consider. Let's see by solving. Here is the statement. Base year, current year, change in rupees, change in percentage. So first, in order to calculate profit, here we have the information of sales. So first write it down. Sales in the base year it was 900 crores and in the current year it is 1200 crores. So there is an increase in sales by 300, and calculate in percentage. 300 divided by base year value 900 crores into 100. So increase in percentage is 33.3%. 33.33%. Less variable cost. So which are the variable costs are there here? You know already studied this in the previous semester, that is preparation of income statement. Here variable cost are material and wages, other are fixed cost. Material cost 200 in the base year, 250 in the current year, so increase is by 50 crores. So 50 by 200, that is 25%, there is increase. Wages 300 base year, 400 current year, there is increase 100 crores, and percentage increase is 100 by 300 into 100, that is 33.33%. So sales minus variable cost, the answer is called contribution. So contribution is 400, 550 current year, and 150 is a changes in rupees. So 150 divided by 400, so in percentage is 37.5%. Less fixed cost or other expenses. So production expenses, administration expenses, and selling expenses. So production expenses 75, 100, changes is in rupees 25, percentage 33.33%. Administrative cost, base year 25, current year 25, there is no changes, so 0%. Selling expenses 85, 75, so minus 10 crores changes is there, and in percentage minus 11.79. So we will be getting operating income or profit, operating profit. So contribution minus fixed cost, 400 minus 75, 25 and 85, 215. 550 minus 100, 25 and 75, 350. So profit increases by 135 crores. So in percentage, 135 crores divided by 215 crores into 100, that is 62.79%. So profit of a firm is increased by 62.79% from the previous year. Next problem number 5. The following profit and loss account and the balance sheet were presented by MRF Limited. So your income statement given. Income minus expenses, it includes both variable as well as fixed expenses. So together we can take, no need to write separately as variable cost and fixed cost. So we can write the total as expenses, and other expenses are there, that is depreciation, interest and tax. So net profit, we have to compare the net profit finally. Is there an increase or decrease in the profit that we have to compare? Then again here balance sheet given. Balance sheet, equity share capital, reserves, secured loans, unsecured loans and current liabilities. Equity share capital and reserves are coming under shareholders fund, and secured and unsecured loans are coming under non-current liabilities. Then current liabilities. Then on the asset side, there is gross block, that is the total value of assets or original value of assets, less depreciation. If there is a depreciation or is any other kind of expenses incurred for that fixed asset, that we have to deduct. So we have to take only net block or net value of assets. Then there is capital work in progress. So net block and capital work in progress as considered as fixed asset. Then investment and current assets. Yes, we'll go for this. Comparative income statement for the year ending September 2014. So first we have to take income from sales or any other source. So total income given here, so we have to take that only. In the base year it was 12,186 and in the current year 13,244. So change in rupees is by 1,058, and change in percentage 1,058 divided by 12,186, it is 8.68%. First item, raw material under expenses, 8,137 base year, 8,635 current year. So in rupees changes is positive, that is 498. Percentage is change 6.12%. Power and fuel 664 changes is in rupees 64 and in percentage it is 10.67%. Other expenses 1,079 and current year value 1,285, increase is positive and changes in percentage 19.09%. So operating income is 1,767, current year 1,928, positive change and percentage change is 9.11%, 9.11%. Now we'll prepare comparative balance sheet. Equities and liabilities, under that shareholders fund, equity share capital and reserves. And equity share capital in base year 4 crores and in current year also it is 4 crores. There is no changes in rupees as well as in percentage. Reserves, there is a positive changes 872 crore and percentage changes is 23.95 crores. Non-current liabilities, under that secured and unsecured loans together we are taking. So there is a positive changes of 386 and in percentage 27.01% positive changes there. Current liabilities 3,183, 3,464, positive changes 281 and in percentage 8.83%. So total liability is 8,257 base year, current year 9,796. So there is a positive change in liability. Liability increases by 1,539 crores and in percentage it is by 18.64%. So net block and capital work in progress, in the base year it was 3,329 and in the current year 4,057. So there is a positive changes in the fixed assets, that is by 728. In percentage it is 21.87. Fixed assets increases. Second is investment 906 in the base year, current year 1,088 and increase in rupees is 182 and in percentage is positive 20.09%. So current assets 4,022, 4,651, positive change in percentage also and also in rupees 629 and 15.64%. And in total assets there is a positive change, there is increase in total value of assets by 1,539 crores and in percentage 18.64%.